Hi, this is Priyanka. Welcome to Goldstone Finvest. Time for daily market updates. Today, Indian markets plunged as surging coronavirus cases spooked investors, creating worry about lockdown-like restrictions hitting nascent economy recovery. The overall market capitalization of BSE listed firms fell to rupees 200 lakh crore. The unrelenting record daily surge in coronavirus cases, fear of lockdown in Maharashtra, and tougher restrictions in other states battered the Indian share market, pushing the benchmark indices lower by more than 3% for the first time since February 26th. Experts added that further implementation of lockdown and all-time high of coronavirus cases have dragged the market to a monthly low. This is expected to impact the economic growth of financial year 1 of financial year 23 more than thought earlier. At close, the Sensex was down by almost 1,707 points at 47,883, and the Nifty was down by almost 524 points at 14,310. Experts said that after resisting at about 14,950 and 15,000 levels, there has been no respite for the markets. Markets have witnessed a single slope fall. However, one needs to be cautious at these levels of the index. They also added that in the short to medium term timeline frame, this is a last support for the Nifty. If the Nifty has to bottom out, market needs to respect the 14,250 levels and bounce from here. The Nifty closed in the negative with losses of more than 500 points and formed a bearish belt to hold and sort of candle in the daily scale. The Nifty remained under heavy selling pressure throughout the day and closed about 3.5% lower as record of COVID-19 cases and the economic cost of the possible lockdown in the states of Maharashtra, which weighed quite heavy on the market. After opening at a gap down at 14,644, the index extended selling pressure as the day progressed to hit the day's low of 14,263. The index plunged 524 points to 14,310. The index made a long black day candle on the daily charts as the closing was much lower than the opening levels. The selling pressure can be extended if the index breaches 14,250 levels, and in that case 14,000 levels can be easily broken. India VIX rose sharply by 16.25%. The spike in volatility from the lower zone has made it tough for the bulls to hold their key levels. The bulls were battered as weakness crept into the weekly charts, thereby signaling the resumption of a downtrend, which is in the progress from the highs of 15,431, which is registered on February 16. In this process, the Nifty not only breached the recent corrective swing, which is low of 14,264 levels, but also tested its 100-day simple moving average, whose value is placed around 14,250 levels at an intraday low of 14,248 levels. On the options front, maximum put open interest was seen at 14,000, followed by 14,500 strike, while maximum call open interest was seen at 15,000, followed by 15,500 strike. Call writing was seen at 14,500, then 15,000 strike, while minor put writing was seen at 14,300 and 14,400 strike. The data indicates that the Nifty could see a wider trading range between 14,000 and 14,800 in the coming session. The Bank Nifty opened with a gap down at 31,637 and drifted lower to hit the day's low of 30,520, underperforming the broader market. It ended the day with 1,656 points lower at 30,792 levels. The index formed a bearish candle on the daily scale, indicating selling pressure at higher zones. Now, till the index remains below 31,500 levels, weakness could continue for downside, moving towards 30,500 and 30,000, while on the upside, hurdles are seen at 31,750 and 32,000 levels. The rise in the COVID-19 cases and the possibility of lockdown in various states, including the economic powerhouse of Maharashtra, triggered the risk of a sentiment. Thus, the trade shifted to its defensive play such as IT, pharma as well as FMCG. All the sectorial indices thus ended in red, with the PSU Bank Index shedding over 9%, while auto, energy, infra and metal indices fell 4 to 5%. BSE mid-cap and small-cap indices also slipped 4 to 5%. On the BSE, the realty index fell 7.7%, while power, metal, capital goods, bank and auto indices slipped by 4 to 5%. Sectorially, selling pressure was visible in realty, infrastructure, public sector, metals, auto finance and banking stocks. On the broader market front, the S&P BSE Midcap Index was down by 5.3%, while Small Cap Index closed lower by 4.8%. What can a trader expect tomorrow? The trend would likely continue for a couple of trading weeks, but cases are likely to reduce in the coming week. The Nifty closed with a loss of more than 3.5% and formed a bearish candle on the daily chart. It breached most of the crucial support levels, and now the day's low of 14,250 could be the immediate support on the downside. A break below this said level could lead to more pressure on the index, and it manages to hold, then this may bounce back can be expected. A strong hurdle on the higher side is near 14,500 to 14,600 zone. Momentum indicators like RSI and MACD turned negative and market breadth deteriorated significantly, further strengthening the view of short-term bearish look. Till the Nifty remains below 14,500 zones, weakness could continue for the downside move towards 14,100 and physiological 14,000 levels, while on the upside hurdles are seen at 14,650 and 14,800 zones. If the Nifty keeps below 14,250 levels, then it could slide to 13,800 to 13,900 sooner or later. In the short to medium term time frame, this is a last support for Nifty. For the index has to bottom out, we need to respect 14,250 levels and it will bounce from here. As stated by Goldstone expert, traders should trade extremely cautiously with strict stop losses and should follow the support and the resistance level on the strict basis. Follow support and resistance level along with trading call as published on a Telegram channel. Views by Goldstone Finvest. Let's build fortune together.